Welcome to another episode in our CEO series here on Learn Grow Invest. Today we have the pleasure of speaking with Cranston Ewan from 138 Student Living. He's actually in the middle of an APO right now. So we're here to have our regular CEO series interview, but we're also going to be touching on the APO a little bit later in the episode. Let's get started. All right, let's open with a word of prayer. Thank you, Lord, for this day. Thank you for the ability to produce wealth. Lord, we pray, Lord, that this will be another impactful conversation, one where we're able to just get great value from what is discussed. We pray, Lord, that you'll bless this community with knowledge, wisdom, and understanding. In Jesus' name, amen. All right, everyone, welcome. Join me in welcoming Cranston. How are you doing, Cranston?
Thanks, Jermaine. I'm well, thank you very much. And good day to our guests online. It's my pleasure to be here.
Great, thank you so much. Apologies. I know there was some dogs barking just now. I think they're settled down. I think they're a little bit distracted with what's happening next door. So apologies for that. We may hear them from time to time, but I don't think that should be a disruption overall. So Cranston, we have actually worked together a little bit recently. So I saw you last at the press launch for the APO, and we did an earnings call a few weeks back. So I'm happy to be speaking with you again so soon. All right, so I wanted to start with just, a little bit of who you are. Who is Cranston, for those who may not have met you before or heard about 138?
Right, that's a very good question, Jermaine. Cranston is by profession, I'm a trained accountant. Okay. I'm a certified accountant with the Institute of Chartered Accountants of the UK, and I'm also a finance major. So I believe that adds a lot of strength to my delivery here at 138. I'm a family man, married, 2 boys, 2 wonderful young men, and a wonderful family here at 138 who I share most of my time with. I spent most of my career in finance, maybe over 30 years, going 35 years of that spent all in finance. And then after that, I decided to take up the helm here at 138 as its CEO and to lead this noble organization in the strategic direction as guided by the board of directors.
I do know that when I checked out your LinkedIn profile, there was quite a bit of experience in accounting, and I was quite, interested to see so much, time in that sector. I guess it adds somewhat of a dimension to your, perspective as a CEO, because you would understand the numbers, right, and what persons would be looking for. What made the 138 opportunity so appealing for you?
Well, to be honest with you, Jermaine, I'm one who loves challenges. And when I was invited to become the CEO of 138 Student Living, and having looked at several of the challenges that 138 was going through at the time, a very young company, and needing strong leadership to take it forward, I immediately became inspired because I said, you love challenges, why not? Why not? And so that opportunity also to serve this type of organization, which was basically new to the Jamaica landscape. We are the only business of its kind, formal business of its kind in Jamaica. And the opportunity to lead such an organization really inspired me. On top of that, 138 needed a strong leader at the time who was going to take it forward, being a new company listed on the stock exchange. And I felt that I was that person. And today, here I am, taking the helm and leading the company forward.
So you were interested in the challenges, and that's not something that's normal. But I guess it means that you have an appetite for dealing with the different variables that come with running such a company. But before we
Yes.
get into the company, though, if you I thought about asking you, if you weren't at 138 SL, where would you be? Right? What if that opportunity never came up? Where would you be right now?
I think I'll be running my own business. I consider myself an entrepreneur by nature. And in fact, it has always been my desire to run my own business. So being here at 138, I operate at 138 as if it was my very own business that I'm running. I take on the day-to-day challenges, owning the responsibilities here and delivering to the shareholders as if it were owned by me 100%.
Interesting. I think that's something that persons can appreciate. One, that you understand the numbers, that you understand, what it takes to grow a company and manage a company well. And two, that you are looking at it through the lens of an entrepreneur, which, having that mindset experience will also help you in understanding what investors are looking for and what they would be expecting from a company in terms of, investment returns. So can we maybe talk about, let's say, the early days now of 138 SL? So you got invited to take the opportunity, you came in. What were those early days like, right? While you were trying to figuring out how to overcome some of the challenges that you would have seen.
Right. The early days, Jermaine, were very challenging. 138 at the time when I took the helm was going through several challenges. I mean, a number of that was already in the media space. We had challenges, infrastructural challenges, among other things. We had some amount of relationship challenges with our key partner, the University of the West Indies. And so the organization needed to settle. And, I came in at a time when these challenges, you had to pivot very quickly. But not only that, I came in 2019, and around about that time, 138 was still not a profitable business. We were still recording losses on the books. And so it was important to understand that my mandate was to turn all of these challenges around. And so it was very challenging at first, but I immediately got on board a team that I felt we could lead the charge forward. And one of those things is that we immediately began to look for efficiencies and to build on those relationships which we know were going to take the business forward. And I think it's important to know that I think today, while not satisfied, I think we have made a lot of leaps and bounds in getting to where we are at today. A highly profitable company, very stable, I would say very sustainable and well run, and we are looking to take it to the next level.
It's definitely a different company from where it was a few years ago. And I mean, we'll get into those details a little bit later. What's one of the things that you'd say that persons miss about 138? Because it is a unique company. And there's not really any other company on the stock exchange to compare it to. So what would you say people fundamentally miss about the company?
Well, there are more than one things that I think they miss about the company. One of the things I want to highlight and to answer your question is the fact that we're a concession agreement, and by that concession agreement, we are guaranteed 90% occupancy by the University of the West Indies. And I think that's very powerful for us to understand. And in simple terms, what it means is that if occupancy should fall, let's say occupancy is 80%, then the university guarantees to pay us that differential of 10%. So basically, 90% of our revenues is already guaranteed, and we need to find the other 10% to make it 100%. I mean, that for us is very powerful, and it's one of the things that I think, persons sometimes will not understand unless they really read a lot about the company. The other thing about the company is that there's a lot of room for growth under the 2 concession agreements that we have. We still have here another 842 rooms that we can build out at the Unimona campus. And so for us, growth and growing that top line revenue, there's still a lot of capacity, coupled with that the opportunities that exist in the island for other universities and regionally in the nearby Caribbean islands, and also the opportunity to enter into other private partner relationship with other entities. So there's a whole set of opportunities out there for 138, which we have not even yet begin to explore.
I'm definitely interested in learning about some of those partnership opportunities. Actually, one of my questions for later on, so we can talk about that a little bit more later. But so you mentioned a little bit about what are some of the things that drives the business. But if you were to, sum up the different ways in which the company makes money or brings about its revenues, what would you say, for persons to have a simple understanding of how you make money? What would those things be?
Our source of income is student fees. That's our primary source. But in addition to that, we also have a very buoyant short-term rental business, and that gives us somewhere about maybe 8 to 10% of our business is from short-term rental. And this is an area that we are looking to expand our footprints in. In addition to that, we have other ancillary revenue streams. They're not very big, but over time, some of them are complementary, and over time, we will grow them. For example, we do have a shuttle service for our customers who wants to be picked up at the airport, be taken to shopping or a tour. We do have our own shuttle service, branded shuttle service that offers this type of service for a fee. And we also earn some amount of revenue from laundry services that we offer at 2 of our halls. So again, we do have other smaller areas of revenue generation that helps to build out the total revenue for the company. Importantly, though, I want to also emphasize that while top line revenue is very important, it's also important to recognize that in this business, cost efficiency is very, very important. It plays a pivotal role, because and it's one of the pillars that we have placed the company on since 2019 to ensure that we are very, very effectively and tightly managed. Very good fiscal management in place, and that helps to drive our bottom line profitability.
All right. So based on what you mentioned as those key drivers, right? And you also mentioned opportunities earlier that exist. Do you see those? Well, I guess the question that I want to ask here is there, I guess, at some point a ceiling or a cap as to how much you can earn? Or is it that once you get to a certain capacity, then you will still have, I guess, the flexibility of the rates being tied to, I think, a US exchange rate? Like, what I'm trying to understand is the ceiling, or if there's any ceiling for the type of business that 138 is.
Right, it's a very good question to ask, Jermaine. What I would say to that is that we have not even begun to explore all the opportunities that are there. A part of our concession agreement, and I would have indicated earlier that we still have another 800 and odd rooms that we can build out here at the university campus under the existing concession agreements. But not only that, the concession agreement provides to us what we call a right of first refusal. So if the university decides that it's going to build additional accommodation facilities, we are the persons that, based on the concession agreement, that they come to first, and we have to first refuse that opportunity. In addition to that, we understand that there are other universities. Let's take, for example, the University of Technology close by. We have been housing the University of Technology students here at 138. In fact, just this year alone, we had applications in excess of 200 plus of University of Technology students. And many of them we were not able to house this year. So herein lies another very key opportunity for us to look to provide facilities for them. And of course, there's the other universities that we have here locally, and we are also exploring opportunities in nearby Caribbean region, where we see already some opportunities that are waiting on us that we are looking to explore. But it just doesn't stop there. We can, the sky's the limit. We can go internationally. There are many opportunities right now in areas like the UK and the United States and other areas that we are already taking a look at to see how we can, explore and exploit these areas for further revenue growth. In addition to that, I would have mentioned other opportunities in the area of private partnership arrangements. There are other private partnership arrangements that we can explore, and we are actively exploring, that are outside the purview of student housing. So for us, the sky is really the limit. I mean, there are many opportunities out there. The important thing is to position ourselves to take advantage of these opportunities that currently exist and that will exist in the future. And this is one of the reasons why right now we are undertaking this additional public offering to really position the company on a sustainable path and to make use of these opportunities that we see down the road.
All right. I mean, you took the words right out of my mouth because I was just about to ask about the APO, right? So we are in an interesting environment in terms of just the last couple of years, where interest rates are, where inflation is. Um, you know, why does an APO make sense for 138 SL right now?
Right. So for us, it makes sense right now, and we understand what is happening within the market at this point in time, Jermaine. We also see that we believe that there are untapped opportunities for us because you know very few companies. In fact, over the past couple of months, several months, we have only had one listing apart from the social IPO. In recent times. So we believe that there is untapped capital out there that we are going after. But for us, it forms a critical part of our strategic objective that 138 right now is highly leveraged. A lot of these buildings that we put up were built with debt. And it's important for us to be able to deleverage the company as a part of our strategy so that we can return, make the returns to our shareholders, both new and existing, and existing, yes, in the form of dividend payments. We had our first dividend payment in February of this year, which is a signal to the market of our clear intentions to make returns to our investors. And so basically, it is twofold: putting the company on a path of sustainability by paying down some of its debt, and also to raise funds that can go into some of these growth projects that we have and are looking at immediately. As I will tell you right now, I would have mentioned earlier the opportunities that exist, and immediately we are looking to see how we can build out another 144 rooms to take up some of the excess demand that we have right now.
I guess the only challenge that you have is the speed at which rooms have to be built, right? Because
That's correct.
it does take a couple of months.
Yes.
So you almost have to anticipate demand, but then once it's built, then you can be able to expand revenues as you go forward. So in terms of,
That's right.
so you mentioned the company being in a highly leveraged position, and you're going to be using the funds to clear that down. How else will the fund be will the funds be used? Is it, all of it that's going to clearing debt? How much of this debt are you clearing? And, how will you account for all of the use of funds?
Right. So from the funds raised, we're looking to maybe use about, say, anywhere between 1.5 to $2 billion to pay down debt, and that of course depending on the amount that is raised. The opportunity that's out there allow us with an upsized value to raise in excess of $3 billion. So it's a significant portion of debt that we are hoping to clear, and the rest will be used for growth opportunities, and of course to pay the various costs relating to the APO transaction. I mean, that's basically the primary use of the funds that we are seeking to raise.
Okay. And then this of course you're hoping to have some impact on the bottom line, because now you're paying interest and there's a cost to that debt. So what can shareholders look forward to in terms of that impact to the bottom line?
Right. So Jermaine, we consider that right now a significant portion of the earnings that 138 makes annually goes to pay debt. What we are looking to do is to carve out some of that debt. So in the end, what you will find is that maybe between both principal and interest, we'll end up with a saving of anywhere between 500 to 700 million dollars per annum in savings, and of course that saving in the form of the interest, which we project to be somewhere in the region of maybe about $250 million annualized, will flow directly through to the bottom line in the form of profits that will help to pay shareholders in the form of dividends. So I mean, for us that's powerful. Our intention is, as I would have indicated, to deleverage the company and to get some of these monies that we are paying to our financiers, the bankers and so on, who have been very good to us, but to convert some of that to help to really put the company on a sustainable path and a growth trajectory for the future.
All right. So you said a word earlier that is a key word for me, right? Because I'm a dividend investor.
Yes.
So I've always lamented the fact that the dividend yields for the companies on the stock exchange are low in my opinion, right? This is something that our community members will discuss all the time. So talk to us about the approach of wanting to reward shareholders through dividends. What type of yields are you aiming for, and the sustainability of those dividends, right? Because once you start paying dividends, the expectation is that you will be maintaining that trend throughout the future, right? So talk to us about that.
Right. So Jermaine, the average dividend yield on the stock market right now, I believe, is somewhere about 3.5%. And I believe 138 first dividend payment that we made in February sits somewhere about there, 3%. Our projections is that once we are successful, which I know will be with this transaction, we estimate that we'll be looking to have somewhere a dividend yield maybe of about somewhere about 8% thereabout. And I think that would be among the very top of yields that are paid on the stock market. 138 is really a dividend company. That's how the company was set up. It was set up to really reward investors or ordinary shareholders. And it's important that we keep to that promise that we made to our shareholders to reward them handsomely for their investment. So we believe that at 8%, anywhere between an 8 to 10% dividend yield is attainable and sustainable for the company. And as we have it right now, interest rates are within those bands. But of course, interest rates are expected, to begin to come down in the very near short term, based on analyst projections. So we believe that right now is a very good time to invest in a company that has the ability pay this kind of dividend yield to investors. We believe that's a very strong proposition.
Yeah. So is it so you mentioned a yield target, right?
Yes.
And of course, for those who are unaware, the yield is always going to be based on the price at the offer, right? So I mean, if the price changes, that yield will be impacted. But is there a target amount that you're looking to distribute per se from profits? Like, so for example, let's say you have your best year yet in terms of profitability. Are we going to see a higher dividend, or are you gonna target that 8 to 10% and not necessarily go higher?
Well, the 8 to 10% is a benchmark target that we are aiming at. Of course, if the company does better, and at the discretion of the of management and the board, it is felt that we can do better and based on the projects that face us, and certainly. But those are decisions that we will take depending on the outcome of the company performance. It would be very difficult for me to make that type of promise here now, because I want to make sure that whatever promise we put out there, we are able to honor it. But we do see that our projections for 8%, 8 to 10% dividend yield is very much attainable.
All right, and we can trust you because you're somebody who knows the numbers, have a background in numbers, so there's no miscalculation there, right?
No miscalculation. It's important to understand that here at 138, we build the company on good ethical principles and trust. So whatever we put out there is what we truly mean.
All right, great. So
Yes.
so let's project into the future a little bit. Let's say that we expect a successful raise. Let's say that everything closes out. You start to put down that debt, and you're starting to realize more cash flow, improve profitability, etc. What does 138 look like after this next phase of expansion?
It's a very good question, Jermaine. I believe our first target is to reduce the debt. And certainly we will be continuing with our good cost management strategies, which we implemented in 2019 and continue to embrace. I believe that we're going to see a more highly sustained, profitable company going forward, and one that is going to grow. Our target, for example, we have 144 rooms that we are looking to build out immediately. That will add about 10% additional revenue to your top line. I believe based on the projects that we have before us, we could see top line revenue growing annually by somewhere 10% or more. So 138 is going to be a company which, you're going to find also our brand being more out there. A lot of people would say, when you say 138 Student Living, some would say, what's that? Where are you located? They don't know a lot about us. But certainly what we have been doing now is to ramp up our branding. And we want everybody to know about this company, this little hidden piece of nugget here on the University of the West Indies campus. And so you will see a lot more out there from us. But importantly for us, and I'm going to tell you importantly, is how we serve our customers. Because for us, that's important. We have been rolling out and putting in place a number of initiatives, of service initiatives to our customers, because we feel that that is important. Our customers are very young people. They're at the cutting edge of technology. They want good quality accommodation on the university campus, as if it's their home. So when they come here, they should feel that this is a place that they want to be and be comfortable. So our aim is to have good, satisfied customers, and this will be done also by survey, because one of our intention is to regularly sample by survey our customers and to listen to them and to hear from them any challenges that they may have, any concerns, any areas that we can improve. So, by listening to our customers, I believe that that is going to make us an even far better company. So there's a lot that's going to come from 138 in the near future. I believe that we're a solid company. We are on a very good trajectory, and I believe that that's going to continue.
All right, great. Thank you for that. You spoke earlier about strategic partnerships, key partnerships that you see as opportunities for growth. Can you give us a little bit more insights as to what that may look like, so that we can fully understand the opportunities for partnership that exist? Because I could see where you can partner with persons to, I guess, take advantage of the space that you have at UWI campus, but how does a partnership work outside of, I guess, your primary location, right? Maybe help us to understand that a little bit more.
Right. So I would have indicated that we operate under a concession agreement. So our model can be easily replicated in other universities, whether or not we have the University of Technology, the UCC, other type of facilities like this. And any we're a real estate company. That's our primary business. So anywhere you have a need for this type of mass accommodation, our model can be easily replicated. I don't want to say too much about it now, but there are other opportunities that we are even looking at. These opportunities could even encapsulate the government of Jamaica that we are looking at. But these are not opportunities that I can speak a lot about right now for confidentiality purposes. But the scope is very wide and can take us very broad into
Interesting.
other areas.
To hear more about that. It sounds interesting.
Yes, definitely.
Okay. So I see Rory asking a question here. Is it that 138 will only have housing on the UWI campus? I think he was thinking the same thing that I was asking
That's
just
right.
now.
Very good question, Rory. The answer to that is no. We are not only looking to have housing on the UWI campus. We are looking to have housing on any other university campus that offers us that type of mass that we can get a good return on our investment and return to our shareholders. Any opportunity that we assess must make reasonable business sense for us. Yes, and will deliver a reasonable return on our investment. So, and as I said, also there are other university campuses that are non-UWI in our nearby Caribbean region, and of course, internationally there are opportunities that we are currently looking at.
Sounds interesting, definitely. So if you're able to take advantage of those opportunities, then we're likely to see, I guess, greater growth in revenues and maybe, ultimately that value being brought down to shareholders in terms of that same dividend yield. I think I'm pushing for like maybe a 15-20% dividend.
Well, Jermaine, anything is possible. We have opportunities right now that if we were to be able to capitalize on those opportunities right now that we have over the next 5 years, you could potentially see a doubling of our top line revenue or more.
Okay, interesting.
Yes.
Interesting. And 5 years is not that long a time, right? So
Yes.
that would be interesting, definitely, to see.
It's not, and just if you look at it also, Jermaine, we're one of the most profitable. We're among the most profitable companies on the Jamaica stock exchange, with a net profit margin of 26%. Yes, so it shows that a significant portion of our earnings go to the bottom line and will be available for shareholder distribution. Okay,
Yeah.
so if you were to look at us deleveraging the company and flowing more of that to the bottom line, then you can see how much we would have increased our ability to make returns to our investors in the form of dividends.
Right. You're
Yes?
definitely saying what I want to hear there, because we actually shared with our community members. We sent out an email a few weeks ago,
Yes.
advising them, well, kind of giving them the perspective that
Yeah.
they should look for opportunities that aren't necessarily centered around cap gain. So actually encourage them in the newsletter that I send out weekly to look for opportunities for dividends. And so it's something that I'm a big advocate of, because you can't
Right.
predict what the market will do in terms of capital gains, right? A company can perform
That's
well, perform consistently well, and still the stock price moves in the opposite direction. But dividends is something
right.
that once a company is able to generate enough cash, remain profitable, then that's something that
Mhm.
gives investors cash back that they can either increase their position or be able to use that cash to do something meaningful. So I'm always an advocate
That's correct.
for getting to that place where I can have, as an average investor, a
Mhm.
dividend portfolio that can sustain me when I get to retirement, right? That is my want to see companies, pushing the limits in terms of what they can pay out in terms of dividends, and continue to make it attractive for shareholders to want to invest in dividends. And I seen Rory saying, dividends sound very attractive to him. This is Rory White, by the way, from Seven Crave, CEO of Seven Crave. So
Hi,
yeah,
yes,
thank
hi,
you for
Rory.
joining.
Yeah.
Yeah.
Yes. Yes.
So yeah, so I'm just a big
Jeremy,
advocate. So
yeah, you mentioned something, and while you're talking about the dividends, you mentioned capital gains. I just want to point out something that we have a very good offer to our existing, both our existing and new investors. All right. Um, our offer on the table right now is $4.05 if you're an existing shareholder or team member of 138 and some of our key partners, and $4.40 for new investors. If you were to look at the fundamentals, you will see that 138 stock is basically trading at a huge discount to the market. So there are opportunities, and while we don't determine capital gains, that's a determinant of demand and supply. But you can see that there is opportunity for significant capital gains also from an investment in 138 student living. So it's a twofold opportunity. One of the things about 138 stock is that it is not widely traded on the market, and the reason for that is because almost 90% of our stocks are held by institutional investors, and only a mere 10% is in the hand of retail investors. So hence one of the reasons why we chose to go the APO route. We feel, and the board feel, that more investors, more retail investors need to be able to gain access to our stock, and that we want the stock to be more easily accessible to small investors, and that's one of the primary reasons why we also decided to go the APO route. Yes.
Interesting. Interesting. Yes, because I do agree with that premise as well, because institutional investors are investing with a different mindset. They're pretty much, they may rebalance from time to time, but for the most part, they're holding, which doesn't lead to a lot of
For the long.
volatility, which doesn't lead to the opportunity for growth on the upside. So wanting to have more retail investors would definitely make sense. Cool. Interesting. So Rory has another question here as well. Well, he's saying that I always think I needed to add 138 to my portfolio, but I always worry about the concentration risk with UE. Could you tell me how you plan to mitigate against that risk?
Well, I believe maybe Rory would be talking about the partnership. So 138 has a very good partnership relationship with the university right now. Um, so let's talk about maybe the receivables. I think maybe that's a concentration Roy is talking about. Um, we have an arrangement in place with the university, and the university is servicing its receivable. Um, we also have an arrangement of set off with them because the university owes 138, the 138 owes the university. And so at the end of every quarter, we have a set off relationship where we reconcile accounts, and whatever 138 owes the university set off against that receivable. So that is the way in which we manage that concentration risk. In addition, a lot of that receivable was built up. Some of it was built up during the COVID-19 period. And because when students were not on the hall, then what you have kicking in is that 90% occupancy agreement that I spoke about earlier in for the concession agreement. That's embedded in the concession agreement. And so some amount of receivable was built up from that. In addition to that, we have, when we built out the Irving Hall was slated to be primarily double rooms. And from that, we would have earned more revenue. But there's an arrangement was reached with the university at their request that we changed the model and incorporated more double rooms, more single rooms, I'm sorry. And so because of that, we had to go back to the table. And I am happy to say that we have negotiated and have landed at some type of memorandum of understanding, heads of agreement with the university. And so some of the receivable that you have seen built up there is also from this arrangement that we have under the heads of agreement that we have agreed on. And the university, I'm happy to say, while not at the levels that we expect, but they are servicing that receivable. And also, as I indicated, whatever it is that 138 owes the university by way of land lease and other arrangements, then those are set off every quarter, and that goes towards reducing that receivable significantly.
Okay, I believe what he was speaking, though, he actually gave some further context. He says
Yes.
because if you would take up his reduce and 138 may be in trouble. I think he's thinking that because Yui is considered your only client,
Oh,
that
yeah.
concentration risk 138's having mainly
Okay.
one client. But I think you mitigate that risk in terms of the things like I guess the short-term rentals and I guess the ability to use the space for other things. So if students aren't
Yes.
requesting that space, then you can use the space essentially for other things, right? For other forms of rentals.
Right. So correct. Okay. My misunderstanding. So yes, but I think what I would have provided earlier forms a lot of clarity
Yeah,
also
it definitely still
for our
helps. Yes,
listening audience.
definitely.
Just to answer that directly, Rory, we don't only house University of the Technology of the West Indies students just now. There's also students from the Norman Manley Law School, and there's also students from the University of Technology. And we have a huge audience from the University of Technology, and a very growing one. So I believe that helps to mitigate our risk, and also we are in the short-term rental space. So even during the summer, when a lot of students would go home, we do a lot of short-term rental, and we do have one of the facility, the Gerald Layla Flats, which comprises 72 rooms, which is solely dedicated to short-term rental.
Okay. Yep. So he said that's exactly what he was thinking, having you as the
Yeah.
main client, and thank you for clarifying the rental opportunity. Yes. So
Yes, you're welcome.
Rory sounds like a dividend investor like myself. So I think we're thinking along the same
Yes.
lines there. So I do have a couple of questions that came in from the community as well. Let me ask you those. It's for persons who weren't able to make the live, but they wanted to ask the questions in advance. So one person is asking here, this question is from O'Neill. He's asking why well, did you consider having a pool for students to apply for the APO? That was his questions. Or do students have the ability to take advantage of the reserve pool?
It's a very good question that has been asked. We do have students, many of them who are shareholders of One Trade Student Living. Unfortunately, and I may need to go back and evaluate that. I am not sure they're part of the key investor pool, but it's a very good question and one that I would need to provide some further clarity to. But we do have a number of students who are existing shareholders. Sorry.
Okay,
And would
interesting.
be able to make, would be able to be a part of that investor pool.
Okay, so if a student is interested, and is there an opportunity for them to be made a part of that reserve pool, or is it something that you'd have to look into to see whether or not that's possible at this stage, right? Because the
Yes.
reserve pool list would have had to be submitted before opening, I
Before.
imagine.
Yes.
Yeah. Okay. Okay. All right. So another question that I have here is that have you? I'm not really sure exactly, but it says here, have you resolved the complaints that residents would have made in the past about issues that might have led to student protest? That's the question.
Yeah. It's a very good question. Certainly, here at One Trade, we continue to work very closely with our student. I must indicate also that we have a student body called resident advisors who, in fact, receive a scholarship from us. There are several of them. Maybe I don't have the exact number, but that could be almost 20 or so that we offer scholarship with, and they help us with student affairs matter. Um, it is something I think that we continue to work on. I will not say to you that we have resolved those matters, because persons can decide that they, at any point in time, that they have an issue which sometimes could be out of our control. But certainly we have a plan in place that where we work with them. We try to handle with any matters that may create a crisis before they arise. Um, Several of the issues, like maintenance issues, we would have made very significant advances with. We have put in things in place like a software called Manager Plus, where students can go immediately to that software from a barcode, which is on the inside of their doors in their rooms and in the common areas. And they can scan that barcode and report any issues that they have immediately, and that comes into our back office and is attended to by our maintenance operations and housekeeping and our occupational health and safety, IT, and our security teams. And we have various response levels for these. Some of them are immediate, depending on the level of emergency. And I think the maximum time frame that we have for any resolution is 24 hours. So we rank them according to the report that we receive, and set priority orders of priority for handling with them. So we have managed to mitigate a lot of the circumstances which would have encouraged this type of student reactions to anything here, because we are having very much closer relationship with our students and residents. Okay.
Okay, and I've always thought it's an interesting model, right? Because your students are your customers, and then I guess in a sense the parents are your customers as well, because sometimes it's parents that are also involved. You have parental relationship, student relationship, investor relationship. So you have
That's correct.
quite a number of relationships to manage.
And I tell you further, Jermaine, and for the listening public, we also have recently, put in place a student relations officer. So complaints go directly to that part of that person, that individual within our organization. And it's a part of our customer relations strategy. So that individual is responsible for ensuring that student complaints are handled in a very timely manner. So yes, we have made significant strides in that. We're not where we would want to be. It's a continuous improvement process. But as I would have indicated that, we are moving, and we have moved and are moving to even deepen our footprint to be a very customer-centric organization.
All right, understood. Thank you for that. So I wanted to close out with a couple of questions back onto personal side of things. I like to ask the CEOs that I speak with, what are you reading or listening to right now? Are you a podcast person? Are you maybe somebody who watches videos to learn? Like, how do you continuously improve your learning as a CEO?
I'm an avid reader. I read a lot of different books. I am engaged with books that I believe can enhance my own skill sets. I am currently reading a book called The Pinnacle, and that for me is a very important book right now that I am engrossed in. But I read very widely. I read just about anything. I'm also in tune to articles on the internet, sorry, that I find relevant and can enhance my own skill sets and leadership abilities. And I also believe in continuous learning. In fact, I will just say to you also that I recently completed the postgraduate diploma in corporate governance that is offered by the Jamaica Stock Exchange. So you will see that even as a CEO, I continue to learn and to improve and to ensure that I'm well positioned to make 138, a best in class company.
Interesting that you mentioned that, because I actually signed up for that same course for October. So I'll be taking that course. I'm very interested in learning that side of things as we work with companies to help them, engage investors. I want to understand, things from a corporate governance perspective. So yeah,
Yes.
I guess I'll reach out to you if I have any questions about it.
Right. So Jermaine, one of our strategic objectives, we are currently ranked, I think, B minus on the stock exchange ranking of right now, and our aim is to move to an A ranking. Okay, we
Okay.
have seen significant improvements. We have been making improvements every year, right? But B minus ranking is among some of the top companies, but we want to be among the very best. And so
Yeah.
that's always also a part of my reason for doing that course, when further enlighten me, and to also to further implement strategies to ensure that 138 exercise good corporate governance in the face of its investors. Yes, I believe we
Yeah.
owe it to our investors to be very transparent and to run a very good company that people can see that we are built on certain principles.
Man, agreed.
Yes.
Agreed. So let's put on your investor hat, right? So you're an investor. You haven't well, give us some insight as to you as an investor, right? Like, how do you look at the market? How do you look for opportunities? So essentially what we want to understand is your profile as an investor. So who is Cranston as an investor?
Yes, it's a very good question, Jermaine. Um, when I'm looking to invest in any company, I look for what I call good companies with um, a very strong product and very strong leadership. Okay, so essentially, I'm looking at companies that I believe are sustainable over the long term. I'm not a short-term investor. I look to the medium and the long term. I believe results are best delivered over that period of time, and so I look for those companies which I believe will be around, because they have a very strong product or service will be in demand for the very long future. Okay, so that for me is very, very important. I also then look to see who is behind those companies, the leadership capabilities behind those companies. Yes, and how those companies operate in the space that they are operating in. What are their ability to consistently deliver returns to shareholders? So there's a number of factors that I look on. There's no one clear-cut factor, but I do have my list of of what I would call my key list that I look onto as to what makes up that great company that I'm looking to invest in. Um, so maybe some of that would be too much to tell in this forum on the short space of time that we have. But I do look for a company with good growth opportunities, with a strong product or service that will be around for many years, and I invest for the long term, because I believe results are wealth is created over the long term, not the short term. So whenever I go, I don't invest, I don't buy stocks, Jermaine. I buy the company. Yes, and I believe it's important for investors to understand the difference between buying a company and buying a stock. When you buy the company, you own a piece of the company. Okay, when you buy the stock, you're just buying it maybe because you're in for the short term. So that's my way of investing.
All right. So is it all stocks that you invest in, or do you have like real estate? Do you have a US portfolio? Do you have maybe other instruments as well?
Jermaine, unlike some other persons, I try not to focus on too many things at one time, because it's not easy to run a company as CEO and to do many things. But I do invest in private business of my own, and I do invest in the real estate market, as an investor on my own. I believe the real estate market continues to provide for us very strong return. Real estate in Jamaica really don't go down. It either stays the same for a period of time and then goes up, but I've never seen real estate lose value in Jamaica. And so I'm a strong believer in real estate. I'm a strong believer in the stock market, investing for the long term, and I'm a strong believer in having a business of your own.
So you're definitely well spread in terms of how those funds are invested and the potential for returns from those different areas. That's quite interesting. So we have some
And anything,
conversation.
Jermaine, one second, Jermaine, and just to say also that anything I don't understand, I don't invest in it. Yes, I just don't. I have to understand it to make that investment.
Yeah, understood. All right,
Yeah.
so I think that's it for my questions. I'll just ask you to say, I guess, a final call to action for potential and maybe existing shareholders in 138 to for the offer that's currently out. Any final words that you may want to say to someone who may still be on the fence, I say Rory here, processing whether or not this may be a good opportunity for him. But what would you say to somebody as we seek to close out this conversation?
Right. Well, there's so much I could say, Jermaine and listeners. But I want to just put some of it in perspective. If you look at the fundamentals and the historical track record of 138, you'd see that for the last few years we have been delivering good sustainable results. As a matter of fact, last year alone we recorded $318 million in net profit. I think that's very, very very strong coming out of a COVID-19 period, and it shows the strength of our business model. Yes, I would have indicated earlier that we have a 90% occupancy guarantee that literally guarantees us 90% of our revenues. And I think that is a very strong, solid business proposition. I would have also indicated that we are among the top tier companies in terms of net profit margin, delivering some 26%. Yes, there are opportunities for growth. We have only just started to scratch the surface of what this business can do. And last but not least, our potential to pay, reasonable, what I call good dividend payments to our investors. I think if you look at all of that and you put that behind the people, the leadership behind this company, then you have a very good, strong company on your hands and a very good proposition for investors.
All right. Thank you so much, Cranston. Great speaking with you again. We've learned so much about you, your history, the approach that you've taken, bringing 138 from a point where there were challenges, but you were able to overcome them. And now, you're leading a company that's profitable, that's about to go into its next phase of expansion and growth. So it was a pleasure speaking with you. All the success for the offer that's out now. And I know we'll have some other conversations coming up soon. So, I look forward to that.
Thank you very much, Jermaine. And I just want to say thank you also to the listenership and the investment public. And thanks for your continued support and the support that you will give to 138 in the future. Much appreciated. Thank you.
All right. Take care. All right, everyone. Thank you so much for checking this out live. For those watching on the replay, if you do have questions for 138 for Cranston, leave them in the comments below. You can also join us on Telegram, ask the questions in the group, and we'll always send them over to the team as they come in. If you don't have the link for our Telegram group, it should be in the description of the video. So be sure to join us. We also send out an email each week to our community. We have over 7,000 members in our mailing list right now. So we send out those emails that will talk about different aspects of the market, talk about, tips and strategies that we think can help you make the most of your portfolio. If you would like to know more about the 138 APO, we actually did a prospectus review on it a few weeks back. So be sure to check out that video. It goes into, the details of the offer, how they will use the funds, the opportunity that's there. And of course, you'd have watched this interview. We actually have one more coming up as well, where we'll, just go into our live Q&A. That one is just questions being answered, anything that we might have still lingering in terms of what we think we would want to understand about the offer, about the company. And so, be sure to look out for that. Otherwise, we just, welcome you to subscribe to the channel if you're new, like the video if you found value in it, and be sure to look out for future updates. We will be, I'm sure, covering 138 more as we go forward, as we try to, see where the company will progress in terms of, those dividends that we have to look forward to, the growth of the company that's to follow after this offer. And it's just something that we like to do too, as we cover an offer, see how the company goes through the different phases and how things are impacted with the offer as it closes. So thank you so much for being a part of this community and watching. And, special thanks to everyone who, continue to support us, right? So thank you for watching, and I'll see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at Learn, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn